On Hot Picks today, we are focusing on restaurant stocks, and we're going to start off with Wingstop. It has a new smart kitchen technology, and our guest says this looks good for the share price. We are joined by Andrew Charles, Managing Director and Restaurant Analyst at TD Cowen. Andrew, great to see you. Just remind us, what is this Wingstop smart kitchen technology?
Hi, Andrew. So smart kitchens are predictive cooking that use some AI variables and inputs to better determine when to make food, to make sure the quote times, how long food's gonna be ready in, shrinks it to about 10 minutes versus what historically has been about 20 minutes plus, for the brand. So not only do you see a lift because the speed of service improves quite markedly very quickly, but there's another leg to the lift in our view as well. And so, based on the fact that you think that people who order with when they go on third-party delivery, order their stomachs and want sub 30-minute delivery, delivery in less than 30 minutes when they go and skip the dishes or DoorDash or Uber Eats. We think there's a second leg that comes to that. And so the punchline of everything I'm saying is that we think you're going to see a nice sales upside to 2026 numbers that doesn't seem appreciated in the stock today. So Wingstop is our top pick for what is, we think, one of the better restaurant structural stories of the next 5 years.
And so it anticipates what the customer orders will be.
That's right. So it's funny that we visited the company in Dallas where they're based, and we were in a restaurant around 11 a.m. when they first opened, and all of a sudden the screen in the restaurant said "cook 9 sandwiches immediately," and it was a little bit strange just because there was no one in the restaurant, the phones were quiet, it's a little early for lunch as well, and sure enough, within about 20 minutes or so, someone showed up to pick up a bunch of sandwiches. You saw these were used as well for delivery orders. So it's predictive nature what they're selling, so that way they can cook things in a much faster way without having to reduce their hold times extend their hold times of 10 minutes after a product's made. So very little food waste from these.
Dutch Brothers, a coffee chain, and in some ways you see that mobile ordering, I think you reckon it has yet to catch up to Starbucks, but this is going to be an important growth driver.
Yeah. So, Dutch Bros is really firing all cylinders. It is the cleanest story within our coverage universe, and one that they've really just hit their stride when it comes to menu innovation, advertising. Just launched mobile order a year ago. It's only about 12% of their sales. Compare that to Starbucks at 31%. So we're in middle innings right now, if not early innings, with the mobile order journey. And while this all builds on each other for 2026, we know that there will be rolling out an expanded food platform that we think will also be helping sales, over 2026 as well. So we really like the opportunity that Dutch Bros has as a beverage-led occasion to really see more food attachment, similar to what has benefited Starbucks in the past as well.
Domino's Pizza, you reckon too cheap. They've always been famous for their quick delivery, but they are working with DoorDash.
That's right. So, after years of resisting and being patient, with third-party delivery, they partnered with DoorDash and formalized the partnership in June. We think there's a nice tailwind over the next 12 months to benefit from sales. And the hang-up on this one is how do they comp the comp? How do they grow same-store sales in line with their 3% forecast in 26? We think management's got some nice tricks up their sleeves that have been proven well in the past. So we think more menu innovations, including a large stuffed crust pizza, is coming. That's something that customers ask quite a bit for. We think as well that they're doing a great job when it comes to more value platforms and really seeing success as the consumers are responding very well to value right now. And so we think this is a business that's very well positioned to continue to sustain outperformance here, and simply think the stock is mispriced based on investor worries about 2026 same-store sales.
It's interesting, you mentioned both coffee and pizza. As far as I know, those are two very profitable products to sell based on the cost of your inputs, et cetera.
Yes, very high margin products. And one other thing, Andrew, that's important too, very conducive for digital as well. And I would say for Wingstop too, where digital is, the majority of their sales too. And the thesis for the restaurant industry that we deploy is those with the best data who lead their respective categories are really going to be the long-term winners. Obviously, Starbucks is about 10 times the size of Dutch Bros. So there's a lot of room for them to catch up. But we think that Dutch Bros has invented a better mousetrap relative to Starbucks.
And just before we let you go, obviously delivery, the fantastic rise of delivery since the pandemic has transformed the restaurant business in many ways.
Yeah, no question. I mean, we get a lot of inbounds on DoorDash and Uber. My colleague John Blackledge covers that one. But, third-party delivery definitely seems like it's a trend that's here to stay and really emphasizes the need for convenience and for off-premise. And so builds really well into the restaurant industry. So you nailed it.
Andrew, I have to ask you, are you a fan of getting food delivered?
I do. I have 2 kids as well who help me with my research on that.
Andrew, thanks very much indeed. Andrew Charles, Managing Director and Restaurant Analyst at TD Cowen.